Okay, I think we're good.
It does happen occasionally when I'm here.
All right, we're good.
I'll call the meeting to order. And my understanding of the agenda is we're going to talk about the audit. Turn it over to those who can do that.
Awesome. Thanks a lot. I'm Evan Cleveland, audit partner with Inster Company CPAs, and with me is Rita King, audit supervisor. Rita did most of the work and now I just present. That's how it goes for the audit partner these days. It's nice. So mostly out to the executive summary, which should be the top document. And your packets that we have in front of us. So I'm on page 1.
Can I just actually, just, this one, okay, perfect. Why are these all marked with the like, you can't rely on this?
So it's, once we get to a point in our audit, so we still have this to do. Normally, we can send one where it just says draft on it and there's really no difference.
Right.
That
That's just the draft marking, so like when you're actually done.
there will be no markings there. Yes.
Thank you. I assume that we're.
Yeah.
Yeah.
A
lot on here.
we're pretty close to having assurance.
All right.
I'm gonna tell you, we are almost.
All right, thanks.
So we're issuing an unmodified opinion on the financial statements. That's otherwise known as a clean opinion. It's the best opinion that you can get. Means your assets, liabilities, net assets, revenues, and expenses are fairly stated in all material respects. We also perform an audit under government auditing standards, and that's a report on internal control over financial reporting. And that report identified no issues and also is an unmodified opinion. We also issue a management comment letter. I won't even flip to that because it's boilerplate language and we have no comments to communicate.
When you're doing the control audit, like what are the kinds of things you're looking for and that you'll find in other organizations that are perhaps not as well run as ours?
We are running into this at another audit and it's, so we look at your control environment, your control activities. So it's called COSO. It's like an internal control evaluation that we have to do for every government auditing standards audit. So control environment, control activities, information and communication, and monitoring. So we look into all these areas of the COSO framework and evaluate whether or not controls are in place or procedures are in place, and we don't have any issues.
So making sure there's
here.
proper approval for any payments, you have documentation for cash receipts. And
Yeah, we look at. all-
if you had purchases, like large purchases, if it had to be bidded, it was properly bids and quotes.
Mhm. So one that we are doing now has no communication. So we're gonna have an issue with that. Well, I do already. But here, there's.
They're not communicating with you or they're not communicating?
Internally. So, yeah, so we look at all those parts of the internal control framework.
And we were all green lights.
Yes,
That's good.
correct.
Well done.
So the next page is required communication. So we're required to communicate to those charged with governance, certain things. At the conclusion of the audit, we do so through a letter. And I won't flip to the letter because the only thing that I need to point out is you adopted GASB statement number 96, subscription-based information technology arrangements, and that did not have an impact on the financial statements. So just said that you adopted it and that's it. We had no difficulties in performing the audit, no corrected or uncorrected misstatements, no disagreements with management. Seeing a management's representation letter essentially says we've been provided everything that we needed to perform the audit and nothing would change. Unmodified opinion. There were no consultations with other independent accountants, but findings or issues or other matters to communicate. Next few slides are some pie charts for your revenue comparing current to prior year. Really not a lot to compare for you guys. So administrative fees are 99% and then other is 1 for years.
What is the 1%?
Interest earnings, I believe. So maybe we could call it interest earnings if you don't like other.
I mean, it's 1%.
Yeah. So the next page is your expenses. So your other contractual are up a bit this year, 48%. And then your contractual professional administrative 52% this year. So Rita will get into why it's so much larger
I'm gonna
this year.
change that too. Should be grant.
Grants.
I'm gonna ask you not to make a grant.
Okay,
IDAs can't legally grant or loan
okay,
money.
so then we'll change the other page. All right, do you want other contractual expenditures?
So we've
Okay.
got another IDA that prefers it be called investment in,
Yeah,
or something like that.
I mean, I think something like that would be good, just as like, it's not just like other, I mean, like, in my mind, I'm looking at this going like, did we like contract for some work other than this? And it's really, we didn't, we made an investment in businesses, and that's why, like, that's what that expense is.
Is that
Yes.
Knickerbocker?
Yes.
Knickerbocker, the
Broadband
food
and-
study, or the kitchen, the food kitchen,
Wayfinding.
wayfinding, yeah.
Yeah,
Okay.
yeah. So I mean, I feel like representing it as something like investments actually sounds great to me, because that's really what we're doing.
Yeah.
And it's not really, I mean, it's sort of odd to call it an expense even, because it's not really an expense. It's not like we spent money on our operations. It's like we made an investment in a.
So investment in businesses.
Economic development.
Investment in economic, yeah, that sounds good.
I mean, it's also nice to represent it that way, like, we made investments.
Yeah.
Like, that's cool, right? I'm into it.
Someone to say that, what?
I mean, I don't know if there's like a legal framework around that of like, it's not like we now own a piece of a company or anything else like that, right? Like, we just bought a piece of equipment for Knickerbocker.
That sounds great.
Okay, so I've got that noted to update that everywhere.
Everywhere.
Yeah, it's,
It is. unbelievable.
so then I'll turn it over to Rita to go over the next few pages.
So we'll skip on Page 6. So these next 2-3 pages are the combination of the IDA and the Development Corp together. So we have a 5-year analysis for everything. With your assets did decrease about $560,000. Or approximately 17.7%, and that's really just due to your operations throughout the year that you can't really do much about. You did,
I mean, that's really due to these investments,
Yeah.
right? It's not that we're actually like our fee
It-
revenue compared to our administrative expenses pretty close to on balance, right?
yeah, it's really just that expense, and then you did have an increase in your
I
other.
mean, essentially, like, the board
expenses.
made a decision to invest money out of our fund balance.
Yep.
So it's not like.
And then the equipment lease back with the Knickerbocker is shown as the equipment contract receivables. We did put it on the balance.
Are you
sheet.
good calling it that? On the statement of financial position, equipment contract receivable?
I think so.
Yeah, and our plan is to like forgive that at the end of some point or something, I don't remember exactly.
Yeah, well, when we dive into the footnotes, it's got that pretty well detailed.
How did we come up with the $71,000?
So it's the net book value of the asset being depreciated 7 years, 5 years in, and then half of that. So it's 50% of the net book value. 5 of 7 years in, that's how the contract stated. So it's if they don't meet the job requirements, this is what they would pay you.
Yeah.
Which is a very similar number to what you had emailed me.
Right. I just couldn't remember how we calculated. It's been a little bit.
Could ask it.
Yeah.
Then there's no liabilities. Just due to other governments is from 2020, 2019. Next page at the top is the fund balance. So again, you had the decrease due to using it for the investments and economic development. The bottom, we have the revenue. So revenue did decrease about $45,000 or 8%. That's really just the decrease in the administrative fees, small decrease in interest.
Does look like that's trending. I guess 21 is just such a large year.
Yeah,
So after the
Yeah.
pandemic, sort of everyone wanted a project.
Yes.
Well, and most businesses, you say we're gonna do this much business this year and it grows every year, but the IDA is really dependent on what projects come in. So, when projects are closing, when they're paying their fees, it can be all over the place. I show that graph some years that, you see it like this.
Yeah, you can't really predict it.
Yeah.
Well, then people come in and say, you should do these kinds of projects. Well, I guess we should, but like fishing.
We ever determine whether we could have the county invest our cash balance so we could get more interest, or is that not allowed? I just don't recall what the.
We have determined in discussions with Lori that we can do that, and there was still some clarification, I think, that was needed about whether we could invest in another treasury,
Investment
that
pool we
the
were looking at.
investment pool that the county invests in, so.
New York class.
So yeah, it's New York Class Investment Pool.
What's it?
It's called New York Class.
I thought you said New York last.
Oh, no. It's an investment pool that the county participates in that's specifically for counties. So there was some discussion of how this, if we could kind of piggyback on with the county, which we cannot. But we might be able to do it separately, or the other issue we had is the county's investment policy limits the amount we can invest with that pool. So if we bring this funding in too, we might go over that amount and then have to take some of the county's money out, which we don't want to do. Their rates are very competitive with the treasury bills right now, so very high, and the money's 100% liquid. So there is another investment pool called New York Muni Trust that we want to investigate and look at and start having some conversations with them to do that, maybe separate from the county for the IDA.
Great. And is it like paying 4.5% or something?
It's over 5.
Great.
Mhm.
Okay.
So a lot of municipalities are in that now, and school districts, and a lot of ones that we audit are in that currently.
Great.
Yeah.
Yeah, from the county standpoint, we didn't make interest income for years, it seemed, but now it matters. But then everything costs more. You know, not to go off in a tangent here, but looking at the administrative fees year on year and trying to predict what's happening out in the community, it doesn't seem like there's building starts, but are they going?
Normally, when there's an economic downturn, you see no fee revenue at the IDA, 2008, 2012. So I think, you know, we're sort of in that period right now where we're sort of seeing that. I mean, we didn't approve very many projects last year. We don't see a lot coming in this year, and when you approve a project, the anticipation is that they're gonna close and pay fees within that year.
I
We've
mean,
got a number that are approved that still haven't closed too, right?
Right,
Right.
projects that have been put on hold, that, you know, part of that I think was COVID and the economy played a part in that. But some pretty large projects that may not move forward.
All right. On the next page, we have the expenses that we talked about. So expenses did increase. More than doubled. And that's really a big part of it is that investment in economic development, along with some increases in the contractual and professional administrative fees.
Is there a way to like show that? Like, I mean, you know, it's like when I make a capital expense in my business, it doesn't show on my P&L, it shows on my balance sheet, right? Like,
Yeah, capitalized asset.
kind of pull that, this kind of like investment, because it's like, or otherwise represent like the fact that like, like, you know, it's like our operations versus our fee revenue is what? Right?
Mhm.
And then we've got this other thing that we've done.
Yeah. So
There's a way to
that's,
show it sort of below the
for like,
line or something.
yeah, operating versus non-operating
Operating.
sort of to
Right.
presentation.
Right, I mean, you could even just like put it below the line of like, you know, here's
As
the
a
total-
non-operating.
here's this non-operating expense or
Yeah.
something. It's because it's like, it makes it look like we just lost a bunch of money this year, but really, we didn't lose it, we invested it,
All right, we're gonna change that grant expense to.
right?
Investment and
Yep.
economic development.
So it's almost, I mean, you could almost just have like your excess of revenues, expenses or whatever, and then at the bottom be like non-operating expenses, net or
Yeah,
something.
we could add something in there.
That'd be great.
Yeah.
And then the next several pages are essentially the same, but they are broken out by the NDA and the Development Corp. So I don't know if you guys want to fully go through it. Essentially, everything is the same. So you see it from each side. And then we get to page 15. Which is the current and future accounting standards. So as Evan had mentioned. The agency and the corporation implemented GASB statement number 96. It was determined there was no material effect on the financial statements. Then the future accounting standard is GASB statement number 101, compensated absences, that's effective for the year ending December 31st, 2024.
That's not expected to have any impact because you don't have any payroll for this entity.
Right.
Yeah, so county will affect a lot, but not
You,
this
no.
entity.
What is compensated absences? So if you're paying somebody who's not,
So that's all of one's sick, vacation, essentially your PTO balance at the end of the year, and this changes how you account for it. It gives them more likely than not for them to use it as when you record it. So it changes it around a little bit.
what is it now?
What their balance is versus their contractual stated maximums. So say my maximum's 250 hours, but I'm at 350, I only accrue 250. And now it's the standard says, is he gonna use those extra 100 hours or not? And so if it's yes, then you would accrue the extra 100. Yeah.
Okay.
Yes.
And
Yep.
it seems like there have been a steady series of changes, like with leases and then this
Yep.
subscription base. Is this part of a program? Are they?
Yeah, the government accounting standards board, they're looking at certain issues that they want to change throughout governmental financial statements, or they just piggyback off of the FASB with the leases. They want to do the same. So I thought we'd jump into the main financial report. Just one of the footnotes I wanted to point out specifically. So really, there were no changes in any of the footnotes except on page 11. Which is the equipment contract receivable. So it details the agreement, and I just wanted to get all of your thoughts on wording and everything. And it spills over to the next page as well. And it essentially shows you well, explains how we calculated the $71,000. So this was an interesting transaction to encounter because we thought it was going to be capitalized fixed asset first, but then the $1 payment sort of made it so it was not an exchange transaction and applied to the separate GASB statement.
So what happens to that entry on our statements at the end of 5 years if they've met their job goals? It just,
So if they don't, it goes away and is expended. Yeah, we'll eliminate the receivable and then it'll go through expenses.
okay.
Yep.
Right, so we presumably expended like 430,000
Yes.
now and then left 76 on that line and then
The possibility of them not making the job requirement, and you don't know
Did
until.
we collect our dollar?
I don't know.
I'd have sent Ida up there to personally get it.
$2.
Job numbers, are they making it?
Their goal was to create 90 or 100 jobs. We committed them to 176 for the equipment. So the likelihood, like that wasn't really in their goals. But right now, I think they have maybe about 80 or 90 employees.
They show 93 on the jobs list.
Yeah, end of last year, there were 90.
Yeah, and there was some, I feel like that was tied, there was some other factory that they were gonna relocate up here if they bought this equipment or something like that. Did they relocate that up here?
Production lines.
The goal was to bring 2 production lines up here and create a new line. The new line has been started. The 2 production lines from New Jersey are here. One is Wiggins Plastics and one is Knickerbocker Bed Company. And their application, they submitted it really under Knickerbocker. I mean, even down there in New Jersey, they didn't really make a distinction between the 2 names. But the goal really was to move the 2 lines, start a new line, create other jobs.
Mhm.
So somehow the IDA tied them to 176 jobs for the equipment.
How did we do that?
There was some statement they made that like, if you buy this equipment, we'll do this extra thing, and I don't remember exactly what the details were, but
Yeah.
the extra thing was gonna create a bunch more jobs, like.
That's my recollection.
Jersey people up or something. I mean, then going back to like, that was like 2 years ago now, so that's, I don't remember exactly.
I
what the
think there was
details
some misunderstanding on both parts
Right,
in that discussion.
So this looks like we're heading towards them paying us that 71,000.
I mean, meanwhile, it's like we got a piece of equipment for free for 5 years and then 71
Yeah.
grand.
Still a good
In
deal.
either way, it's a really good deal and yeah,
Be great if they created some more jobs too.
That it would be.
You can't lose.
yes.
So that was the only one that I wanted to cover. It's a little different from the previous year. Overall audit went very well. Still waiting on a couple of jobs, that Ina's
Oh, my
on.
goodness. Yes, they have been reminded.
I have a couple of questions about the notes.
Sure, yeah.
For you have highlighted, so that's not updated yet, you know, and I think I look at this every year and go. The last
Wait,
paragraph under note 4, it says in addition to pilots above 3.6 million of sales tax and 21,000 of mortgage tax abatements were awarded.
Mhm.
Can you change that to received?
Yeah.
It's not like we approved those or gave them.
This is the ones that
something.
we actually closed on,
Yes.
not the like, right?
No, this is how much they saved during this year. It's not projects we approved, it's,
Didn't we have a discussion, a robust discussion last year about the wording on tax abatements, I thought, in terms of changing that
To
wording,
incentives.
or something like that?
I believe we did, and I don't think we can change it to incentives.
Okay,
right, so do you have, and then the paragraph above that, the 4 million was received in pilot payments compared to 9.6 million, which would have been received if businesses paid the full amount of property taxes.
Yep.
Like the whole thing about the IDA is a but for, and if the IDA hadn't delivered those incentives, there would be no property taxes.
Agreed.
So is there a way that
I mean, could we,
could or should reword that?
We can.
I feel like last time we talked about this and you had to like. What those properties would have paid if there was no project and like whatever it's like, and I don't know if this is like for this specific set, if we could say like, you know, baseline tax was this. Abated tax.
No, we don't track all that.
Don't track that.
We don't.
I mean, otherwise it's just a sort of like footnote of like. We wouldn't have gotten any of it, which is sort of a like, I mean, I guess.
Well, could you just say that was 4 million was received in pilot payments? I mean,
We could probably say that there is the supplemental schedule there that has the amount abated anyway.
I mean, the numbers are there and that's how the state wants it because that's what we put into Paris. In terms of like, what was the pilot, what would it?
it's on here.
Yeah, so
It's on.
do you wanna end the sentence at pilot payments received were 4 million and then see schedule of projects or
Yes.
for additional details?
Okay.
Yes.
Okay.
Okay. Is that amenable?
Yeah.
Okay, that was one question. On note 8. The agency did commit $100,000 for contractual services related to a conference center project. That was the wayfinding. The Development Corporation also committed $100,000 for the shared commercial kitchen, which is not reflected here.
Okay.
And then, there is also outstanding previous year's commitment of $350,000 for the broadband project, of which 94,500 has been expended. So in terms of commitment, there's still that 255,500 on the broadband, and I think that should go
Yeah.
in there,
I agree.
as well as the kitchen, so.
Thing that's from the past, the way like all of the money from like the childcare stuff and all
Yep.
that, like all the other stuff's been gone.
Correct.
So that unrestricted net position
What got any money back?
should go
Or we,
down
Yep.
by 355,500.
for some reason,
I don't recall off the top of my head, but
there was something about that, but that was probably far enough back.
And It's not necessarily related to this note, but this is where I started thinking about it. We paid 94,500 in fees to the attorneys in relation to a legal situation with a project.
Yeah.
And that project really ought to have paid the legal fees, but they're not paying them.
We build them, presumably we built.
We've billed them, they have, or the attorneys have billed them several times, they have not paid. So the IDA did pay it because it needed to be paid. But does that show up as a potential receivable somewhere, or does it need to be accounted for?
If you expect to receive funds from them, yes.
I don't expect
How does
that.
that, right? It's like,
So
it's like a doubtful receivable,
Yes.
but it is a receivable,
Yes.
right?
So if you don't think you would collect anything, we would establish a receivable and then allowance for doubtful accounts, so it would just be zero across the board. In the end, if you want to do that, we can do that.
Well, I think administratively to have it in our audit, like it shows up that there's this potential receivable. Because otherwise, 3 years from now, when we go to court with them and we're settling, how do we remember that we paid these legal fees?
Good point. So, yeah, so I would definitely,
I mean, I'll
Yeah, it sounds
remember
like-
forever.
There will never
put it on
forget.
one side.
We're marking them by the age of your daughter, right? That's the, just like.
But then also to Heather's point, with the items that she,
82,000 and
I wrote it down somewhere else in my notes.
94, it's,
Right. 82,035.
but to Heather's point, with the items that she just discussed that we haven't expended yet, but we've committed to.
Yep.
So I'm assuming then we got to take that out of our operating expenses and dump it as a liability, right?
So are there contracts in place for spending these items?
Yeah.
And do you have an invoice from this company for?
No, I mean, like the broadband thing is like, we committed
Yeah,
the funds, we've
yeah.
got a contract with the entity that's gonna get them, they have to do something and then
Yeah.
eventually bill us.
So we wouldn't book a liability until you actually have an invoice from them to pay, so you're obligated to pay. Right now, we just split it out in the commitments footnote that,
Right,
and
Okay.
how it's presented on
Right.
the entity-wide financial statements, it's unassigned fund balance. So you either have three categories: net investment and capital assets restricted, or unassigned, and restricted is like an external legal restriction. So it would stay within unassigned, which is why we have this additional footnote.
So we
say, hey,
signed, even though the board has approved
Yeah.
these funds to go out.
Yeah.
Because I mean, we've essentially encumbered those funds, we need to make sure that we're tracking it in a way.
Yeah.
It's like, that's just on our own
Mhm.
sheet, that's.
and we have that split out in the executive summary too.
Right. Where's the footnote about that? Which was the one?
No 8.
on page 12.
I mean, I don't know that it goes there under commitments. But I was like, where should that go? If it's a separate note.
Right. So then, but we don't have anything in here that covers the past commitments, I guess is the question. So there should just at least be some line in there that says, this is in addition to these past commitments, which don't appear on the financial statement.
They'll still exist at year end, so they will
But the
be in there.
commitments are monies going out. Should be money
So we're
coming.
talking about the receivable. We'll have a brand new footnote
Yeah.
for that.
Okay,
Yeah.
receivable. Yep.
So that'll go after or before the equipment contract receivables will
Probably
be,
before.
okay, so that would be note 6 and then.
That's gets pushed.
Becomes
Yep.
note 7, yeah.
Okay. On page 4C, the management system and analysis.
Mhm.
That middle paragraph there about all the metrics for the IDA and the Development Corporation.
Yep.
I'm certain that 6 megawatts of renewable energy is not correct. So I asked Ina just to check all the numbers.
Yep, she's
Yeah.
on it too.
Rita, she took care of
On
it.
top of things.
I have them marked.
Great.
What was the brand?
65.
That's a little better.
And all the other numbers, were those accurate or?
Actually, the new units with also units of rental housing is up and the square footage is up.
Okay,
So, yeah, no worries.
thanks, Ina.
You're welcome.
What are those corrected numbers?
2,141 new units of rental housing, $13,139,025 of new or renovated square feet space, 65 megawatts. The 5 of Caramar Solar is not in here because that's a 2024.
Thank you.
So next year we'll have more megawatts. Woo-hoo. Fun and exciting. That's why we go over these things. Because you need to keep up exactly everything that we do all the time among all the other ideas.
I mean, I don't know if anybody actually reads this thing, but like, that's a pretty profound, like, something to be proud of, like millions of square feet of new buildings. You know, thousands of units of rental housing. And, you know, tens of megawatts, almost 100 megawatts of renewable energy. That's huge.
I try and update it fairly regularly on our website, so I will have you update the number. The numbers do appear on our
That's
website.
awesome.
Probably have, but I'll double check.
What to be proud of.
Yeah, yes, good work. Good idea. And I just wondered if in the executive summary, we might want to highlight some of the things in that note 8. I mean, investments in economic development. You know, so shared commercial kitchen, wayfinding sign, I don't know.
So you want it to go at the end in front of current and future accounting standards, like your accomplishments or something like that.
And I think it might be nice to.
I can just basically snip what's in there.
Executive summary.
Nobody makes it to page 4C other than here.
No, are you talking 4C or no 8?
I'm talking about
No,
note
8
Okay,
commitments.
commitments.
Well, should we put it?
But note 8 doesn't really highlight what the things are. It's just like, we allocated some money to stuff, right?
So
Yeah, so I'm probably over engineering things.
on page,
I didn't know that yet.
On the website, at least, right?
Yeah.
Like, I mean, that's the like, you know, let's throw about it there. Nobody's reading.
so just so I'm on the same page, do you want to break out? So we just say future commitments on page 7 of the executive summary. Do you want to say specifically who they are to? Out to, or? I mean, this document just goes to you guys, doesn't go to anybody else.
Oh, then we don't need it.
Okay.
Never mind. I'm making things more difficult than they need to be.
So really in the MD&A, that's where, if you want to add more, that's the place to add it. The future factors section of the MD&A is for more info.
Well, some other report that we had, and it might have just been our annual financial report in one of our board meetings that just sort of listed out the like, these are all the projects we allocated money to in the future and how much of that was expended and therefore how much was remaining. And I thought that was a really nice summary. I don't know if there's any place for that in here. But just like, you know, things like, this is the commercial kitchen, we allocated 100,000 to it. This is the broadband project, we allocated 350,94 was spent, like, et cetera. Right, I mean, you've shared that table, I think it's just in our annual financial report or something.
I think I shared it. It's either, we keep track of it in our quarterly budget reports. It would be there.
Right.
And then I think I shared it when I did my fund balance memo. You know, because it looks like we've got this fund balance, but we have all these
We've already agreed.
commitments. They're not technically under accounting standards. Restricted. They are considered unrestricted. I mean, usually you'd see board designated or something.
Yeah, that'd be for the.
That's for something else. So I do take our fund balance and then I minus all those future things out of it. And I think that's probably where you saw it.
Yeah. It's weird to me that like Gap wants us to like keep track of our Adobe subscription for like $20 a month, but they don't care that we, as a board, committed $500,000 to something and haven't spent the money yet and need to not spend it twice. That just like, but.
That's why you have notes to the financial statement. Supplant the notes or the notes. Okay. Meanwhile.
Do we need to have the committee recommend approval to the full board pending me getting? I think the way we did it last year is the committee recommended approval of the draft. And then authorized me to input the information in Paris pending me receiving the last few
What, like,
documents.
if you never actually get the numbers, you just input what you have. absent
Correct,
that, which-
and I mean, worst case scenario, if people don't, I'm not gonna make up a number, so if they get a zero.
Zero,
And then the
yeah.
board can decide to take their,
Right. And then we have that process that we do where we annually review all the ones that aren't meeting their whatever. And
we try very hard to get
All back.
everything. Even if it is, they tell me they have zero, that's fine, you've reported,
Right.
but, yeah.
So, right, so really it's like we're recommending that the board approve this audit. Understanding that these numbers may change slightly between now and then.
Right, and right now it's
But
just a
then-
job.
How do you make that motion?
And I will make that motion,
I'll second.
Okay, all those in favor?
all three of us.
Yeah.
Hey, it works.
Okay. At least it's an odd number, so if there's a debate, there's no tie.
Yeah.
Yay.
Thank you all very much for your work and
Yeah.
Heather.
Thank you.
Yeah, big thank you to Ina and Heather, Ina especially for the scheduled projects.
Great, so.
Yeah.
No, I'm gonna end this if everyone's okay. with
Yeah.
No.
Should we officially, yeah. Yep. Adjourn.
You're